Oh, there we go. What's up, y'all? We are live. Welcome to another episode of the Imperfect Action Show. And today's going to be pretty good. Today's date is Wednesday, March 23 or March 23rd. And we're going to have a pretty good guest on today, Miss 30 Day Results. And actually, she just popped on right now. So why don't we just bring her on real quick?
It's Brendan Boyd. Hi,
Yo,
Brendan.
what's up?
I'm also on Instagram telling everybody to come on over here and join us. I'm so excited about our conversation today. How are you?
I'm doing good. I'm about to do this. I'm about to do the same thing right now. So
Okay, let's
normally
do
what
it.
I do, this what I'm gonna do. So
Uh-huh.
normally what I do, we start the show off. It's the Imperfect Action Show. On this show, what we do is we talk about principles, strategies, lessons that are tangible that people can literally get right now and implement into their situation, make the situation better.
Yes.
Today's episode, I got Jenna, who's gonna be amazing, Miss 30 Day Results. And why don't you introduce yourself? Tell them a little bit about you and why you're doing that. I'm gonna send a text out to the community to let them know we are live.
Okay, all right. I would love to. So, yeah, thank you so much, first of all, Brendan, for having me. I am definitely a fan of the show. I've caught a few episodes and absolutely love it, and just excited to be a part of this platform. My name is Jenna Nicole. I am a credit coach, and I specialize in helping people get their credit report strong enough to get the home of their dreams. A lot of people think that credit is just about your score, but there's so much more that's involved. And so that's what I specialize in. I am a Georgia resident, Georgia Peach. I'm currently an AT alien for all of my Outcast fans. I love to travel. My next dream vacation that I cannot wait to go on is the glow in the dark, or are the glow in the dark beaches of the Maldives. So that's one of the things that
Yeah.
I'm working on now, getting my business credit structured to where I can actually get paid for that trip. I am a divorced mother of 6, and in the last 10 years, I have supported my family primarily in the finance industry. I started off as a tax preparer, but now my passion is absolutely credit repair. I love helping people to get those reports where they need to be, because I've seen it be so life-changing in so many ways.
And that's amazing. That's really amazing that you're passionate about doing that. This is a area of expertise that you want to make sure that you put onto different people and into the community so they can change their situations and grow their credit and grow funding opportunities and get to that dream home and things like that. So that's really what we want to talk about. I want to really give you the opportunity to share and spread the light on why credit would keep somebody from getting a dream home if they're in that situation right now in real time. What are some moves they can do and why they may want to correct that situation.
Okay, yeah, there are some really strategic things that you can do to get yourself in a better position, and that's why I love this show, because I've seen some amazingly strategic advice come out of this space. So yeah, I've really come to see, and I'm sure a lot of people know, that there is just both systemic and systematic racism um, in kind of finance across the board. And we're more familiar, I think, as a whole with things like redlining by the banks, where we get those loan refusals to, when we're trying to get into certain neighborhoods. And, that, because we're more aware of that, that's not happening so much anymore. And I feel like if more awareness is brought toward what's going on now in a very similar way with the credit bureaus, our credit reports, and when I say our, I'm speaking, about the majority African American population, are considered credit invisible. And credit invisible is an actual term that the credit bureaus use when it means that your report really just doesn't matter. It doesn't hold the weight that it needs to get what you're applying for. And generally that happens when you don't have enough credit history.
What was that? What was that term? Because I want to make sure that we follow back on that at the end. Credit
Credit invisible.
invisible.
Yes,
Wow.
credit invisible, and hold that thought because I have like a little announcement at the end. So I'm glad you keyed in on that particular term, because it's major. But what happens is, even though it's supposed to have that general definition, what we found is that even in a file where a Black person may have credit established, the same as our other counterparts of other races, we still may be treated by lenders and creditors and mortgage loan officers as if we're credit invisible. So, one of the things that I specifically do is fight for my clients to make their credit file so strong, so impeccably strong that it's impossible for the bureaus to ignore them, or for them to get ignored for those mortgage loans. It's another case of we kind of have to be better to get the same. And I think that people just really don't realize what a problem it is when it comes to the credit industry.
Yeah, no, for real. I mean, I'm thinking even back to my own situation. Like I remember, and I shared this on a live the other day. But I remember when I was 20, I think I was either 23 or 25.
Hmm.
But I bought my first home. You know what I'm saying? And I wasn't really up on credit like that. Like I knew my credit was cool, but I wasn't doing anything to better it. But I also wasn't doing anything to worsen it. But it was good enough, and I had the income available to actually acquire my first home.
Hmm.
Um, but right, because I didn't have that insight that you're talking about right now, like right, like the understanding of the power of credit. You know what I'm saying? I didn't really know what would happen after that. So got the home, but then right, my credit kind of went down because I wasn't maintaining it because I didn't know the importance of keeping that credit health, you know what I'm saying, up and things like that. So I think, people that are getting to know more about, how you're presenting it, the information around it, how important it is, especially if you're looking to purchase a home or just put yourself in a poised position to make some bigger moves. Like it's very important for you to have that. And I like how you said, you want to make sure that like their presentation and their profile is such where they cannot be ignored by some of these institutions, so they can actually move and shake the way that they would like to.
Yeah, because Black people deserve excellent credit too. Am I right? Or
Well, you're right.
it's not
You're right.
fair that we would not be able to live and to have to settle for a home. It's great to have any home. It's a blessing and it's a privilege, and we know that in a lot of ways, in American society, we do have advantages that you may not find in other countries. Even though, in my opinion, we are quickly becoming a third world country in some ways. But that's another show, another topic. But I mean, so it's not a matter of being ungrateful. It's just a matter of having a play and level, a clear, fair, just, and level playing field across the board. So that's one of the things that we strive to do. And if it's okay, I'd like to tell a little bit about how a client would start that process of really being able to understand their credit reports.
Yeah, 100%. So why don't we do that? But also let's take a question because this question may also be in line with what you want to share, right? So Ty's asking, what's the best way to get your credit improved if you wanted to do it yourself? Like if you had high credit cards, I know to pay them off, but what about after to increase the score?
What about average increases of score? Is that what you said?
So after you pay them off, increase them
Oh,
more.
how do you increase the score?
Yeah.
So one of the biggest things, is to make sure that you're not paying something off that you actually do not owe on. So you only want to pay creditors that you've actually signed an agreement with. So one of the first things I always recommend for anyone to do before they embark upon do-it-yourself credit repair, which is absolutely possible. There's nothing that a credit repair company can do for you that you can't do for yourself, given the time, energy, and resources. If you have the knowledge, you can do it. But it is a process, and you do need to be educated. So that's one of the first things I would recommend is for you to educate yourself on the Fair Credit Reporting Act, and how it applies to your particular situation, familiarize yourself with the agencies that govern the credit bureaus, like the Federal Trade Commission and the Consumer Financial Protection Bureau. And there's a few other laws and a few other agencies that, if you research them, you'll find them. And also you can follow me on Instagram. My tag is the same as here. I think Miss 30 Day Results, at Miss 30 Day Results. I'm constantly giving out do-it-yourself credit repair tips. There's a little bit too much to give like in this one segment, but the first thing that I would definitely recommend is that you educate yourself, because you don't want to spend thousands of dollars paying off third-party agencies that you don't actually owe, just because your original creditor has sold off the debt. So you want to really understand how to use those dollars to the maximum potential, because paying a bill does not remove the negative from your credit report. All it does is bring you into good standing with the agency that you pay or the bank that you pay. So you can go back to that particular bank, perhaps, but perhaps not, because if they look at your credit report and the negatives are still there within a 24 month time period, they're still going to fault you for that, and your scores are still going to be low. So you definitely want to be super strategic when you're paying things off. It's beneficial to pay. It's definitely beneficial to pay. It's beneficial to keep great relationships with banks and to keep your credit history and to keep those positive cards open as long as possible. But you also want to make sure that you're not throwing money away and then not getting the results that you really want for that increased score. So education is really important. Also follow me for like credit building tips. I will give you one other, really strong credit building tip outside of, just focusing on the credit card and helping you to get more of a mix. A lot of people don't know that when you are renting for years and years, you can actually report that rent. You can have that rent reported to the credit bureau so that you're getting credit for those on-time payments every single month, the same way that a homeowner would. So homeowners every month get credit for making their mortgage payment, right? And it's not fair that a renter could, have a 10-year rental history that's impeccable, but get no credit for it. But let them be late one time, 30 days. Oh, it's going on your credit. So there are ways that you can actually report your rent. There are several different companies that allow you to have your rent reported, and a lot of them will allow you to go back from the day that you start working with their company. They'll let you go back like up to 12 months
Yeah,
and get that 12-month rental history.
yeah, that's pretty crazy. So that's a great gem for those that don't know, that are currently renting, that you can utilize your rent behavior consistently every single month and have that reported as a positive standing on your credit report. So that's pretty major. So what's a good mix for somebody outside of the score? Because the score obviously is a score, but what's a good profile mix? What should people be looking to have on working on their credit profile?
So that's a great question. You want to have a variety of different account types. Okay, so the most well-known account type is your revolving credit, which are credit cards. Those are some of the first things that we get offered, straight out of high school. Especially if you go to college, they'll start offering you all of these credit cards, and that is usually the first type of credit that people end up with, that revolving credit. But in addition to revolving credit, you also want to have some installment credit, and that comes in a few different forms. Auto loans is a form of installment credit. And so when I say that you want to keep that mix on your credit report, it's really imperative, because when we get a vehicle and we're paying every month on that car, we're always super excited to get to when we can make that last payment, and we're like, yes, I got to the end, I'm about to make my last car payment. And it does improve your DTI, your debt to income ratio, which is another factor that's looked at when you are going to buy a home. So that is a big accomplishment and it's major. But if that's the only installment loan type that you have on your credit report, once you make that last car payment, you'll notice that your credit score will take a dip. And people are
Mm,
like, what? My score went down, but I paid off my car. How does that work? It's because you lost that in your credit mix. So you want to have a few different types of installment accounts. A mortgage account is really, really major once you start getting that home loan on your credit report, that's a really big deal. So yeah, you and oh, and let me talk about medical bills, because this just happened, and it's one I haven't been excited about um, something in credit like this. I haven't had any credit changes that I've been this excited about in a long time. So medical bills have long been reported on our credit report, and it reminds me of when we used to have liens and all of that kind of stuff that used to go on your credit report. And by the way, public records, the only public record that can go on your credit report now is a bankruptcy. So if you get a lien on your home or anything like that, that can't go on your credit report anymore. So that's awesome. And along those lines, now um, they're starting to roll out plans where medical bills are not going to be reported anymore.
Oh,
So this is
that's awesome.
Man, this has always just been the craziest thing in the world to me. And it's how so many people end up with horrible credit scores because they have some kind of unexpected illness. They get all of these piled up medical bills from the hospital that they went to, then the lab, and then the doctor has his own separate bills. And, they just have, and you can't work if you have some unexpected medical condition, so a lot of people really end up with their credit scores in the dumps because of medical issues. And so I'm so excited now that they are starting to make changes to this, because it's always been a violation of the HIPAA laws, which states when you are signing all those millions of papers and in the hospital, that they're not going to share your confidential medical information with a third party. Well, the credit bureaus are third parties. Like, how have they been able to do that all these years legally? I don't know. But finally, they're making changes to that. So that if you have any medical bills on your credit report, know that those are going to start to roll out, especially if they are less than $500. They're not going to go on there at all. And, millions and millions of dollars are going to be removed by the end of the summer in medical bills. So I'm really excited about that. And that's what educating ourselves about credit, those are the kind of differences that make. So how excited I am sitting here right now about these changes with the medical bills. I want to be this excited, going forward, about how as a whole, our community is not carrying that title of credit invisible anymore, and that we're understanding, the strength in our credit, and being able to move forward with confidence, and being able to speak with confidence when it comes to our credit reports and what we're allotted and what we're not. Because once enough of us find out, these changes are going to start being made, just like, with these medical bills.
100%. There's a lot of value right there. I think for those people that didn't know, like that's something that I didn't know, and I remember having bills when I was younger, some medical bills that was on my situation, and it's like, to your point, like why are they sharing that information? Why is that being reported? So the fact that that's going to be able to come off is amazing for people moving forward. So we got another question. Ty's asking, so that would allow your credit to shoot up if you have a lot falling off. So would those fall right off, or what would you have to do? So if you have some medical dings on your credit right now, and let's say this does pass, so when it does pass, do they automatically fall off? Do you have to go to the route of getting them removed? What do you think would happen?
Well, there's a series of rollouts that they're making, and so they may not all fall off immediately. Anything that's under $500 is going to come off first, and you should start noticing a difference in that within the next few months. Well, the summer months between June and August is when you'll notice those the most. But the great thing about it is because this has already been approved, if you want to go ahead and start being aggressive about contacting the credit bureaus yourself to get them off, they will come off a lot faster now. If you take aggressive action rather than waiting for them to fall off. So that's what I would recommend that you do, so that you can kind of have a little bit more control over, when it happens. It's kind of like the stimulus checks gets approved, and it's like, well, when am I going to get my check? When am I, whenever it comes in the mail, or whenever it, gets direct deposited, they give all these quotes, quoted dates and stuff, but it kind of is left up to someone else. But you can take control of that in your own hands by being more aggressive about approaching them with those medical bills, and they'll definitely come off more quickly than they have been in the past. And another thing that hospitals have been allowed to do, Man, hospitals really mess with people's credit. Like I've seen, like play games, and it's frustrating because I deal with it all the time. So you'll get items off of your credit report um, for bills that are cited. And once they come off for the violation, they can you can simply get it off because of the violation of the HIPAA law. Once it comes off, and they being the medical institution, once they get notification that it's come off, they will actually put it on under a different account number, same bill, but with a different amount. And because they changed the amount, they can legally report it again. And so I've seen them go from $150 bill to 145. They just can't do it for more than before. So they'll go down to like $145 bill. And they'll keep putting, every time I get it off, they'll keep putting it back on.
Yeah, that's sneaky.
It's crazy.
Yo,
And
but
it's
you know what?
smaller, like
Shout out,
urgent
yo,
stores.
shout out to these organizations for doing whatever they can to get to their money. Like it's sneaky and it's definitely messed up, but you have to respect the diligence. You know what I'm saying? So if you take that same type of energy and you put that in your own business when it comes to you
Man.
collecting, when you come for you collecting payment from people or just to follow up, because that's what I received in it. Like it's like same thing with Donald Trump. Like Donald Trump has his ways and it's whatever, but you have to respect the acumen and the strategy. So
Yeah, I
that's what
agree.
I picked up from that. But that's crazy. So like for that situation, and they continue. Let's say that's on somebody's report, and they're doing that. How do you stop that, or do you have to keep just fighting that and removing that?
Yeah, as far as I know, you have to just keep fighting it, but that's why I love constantly learning about this
Yeah,
industry. It's an ever-changing industry. Credit and finance and the banks, lenders, who's lending when, and just how things work. The laws are always changing surrounding it. So that's why I always make sure to, continuously educate myself and to surround myself with a community of colleagues that are also in the industry. But yeah, as far as I know to date, until now that the laws have changed, I just would have to keep fighting it until one of us got tired, and it would always be them.
yeah, no doubt, no
I like
doubt.
to win.
So we're coming up on an hour. So a couple things I want to touch on. Number one, make sure you guys follow Miss 30 Day Results on Instagram. I pinned it above. Well, actually, I mentioned it above. I can't pin on here, so I'm gonna throw it again. So it's at MS30 Day Results. Throw that in there. Make sure that you guys give her a follow. So let me just add that in there real quick. Let's go over a couple of things that you talked about. You talked about, being credit invisible and why it's important to become credit visible. You talked about to only pay creditors that you have signed an agreement with if you owe. Is that correct? You that all right?
Mhm.
Just want to make sure I got that correct.
Yes.
Paying a bill doesn't remove a negative mark. It just keeps you in good standing. So you have to take it to the next step to actually remove that remark. You can get credit for reporting your rent. You can go back to 2 years on that, something like that.
12 months.
12 months. A healthy credit profile mix is going to evolve, going to involve revolving credit and some installment credits. Is there any other thing that you would recommend to be in that mix, or those are the two primary things?
Those are two primary things that you want to make sure that you have to be strong for your home loan.
Okay,
Mhm.
cool. And then medical bills will soon be will soon no longer be reported as soon as this law passes. Now, in reference to someone's credit report preventing them from getting that dream home, what does that look like as far as a strategy? So if my credit is busted, let's use me for example. Let's say my credit is at like a 580, and yeah, my report is really got me jammed up, and I want to get that, I want to get that $500,000 crib, that
Mhm.
$750,000 crib. Um, break down the strategy or the mindset, the moves that I need to make to put me in position to make things happen.
Yeah, I see that all the time where people have the money. They'll have the down payment. They have everything picked out, but their credit scores are holding them back. And so, in that case, just specifically speaking about your credit, one of the first things that I would do is just go ahead and take the time to get a credit analysis so that we can see exactly what things are on your report that have your score down in the 500s. And usually it doesn't take that long. Like, I can start having results to be where they're seen in the first 30 days. I mean, we can get easy things off like your inquiries, and of course your medical bills have always been able to come off pretty quickly, but now even more so in the first 30 days. And then it may take a little bit longer for like collection accounts. And then if you have like late payments, student loans, bankruptcies, repossessions, those are the things that usually take a little longer. So I would definitely say start at least 6 months before you're ready to make that purchase. So if you want to be looking for your home, you need to start 6 months before you're ready to start looking for your home with evaluating what's on your credit report. And so, with my company, Fresh Start Credit Counseling, what we do is we give you a comprehensive analysis, which is a 15-page report that kind of helps you break down your credit report. So, even if you've never looked at a credit report before and have no idea what you're looking at, this analysis will help break it down into really easy to understand terms where you can, take in the information bite size, so that you'll know what's holding you back. And then from there, we'll be able to give more of a direct timeline. Even though what I gave you is just a general timeline based on the account types, but we'll be able to give you a general timeline of how long it takes and put together a specific strategy to match your needs so that you can get where you need to be with your credit report. And then we do work really closely with some lenders. We study the industry, which banks are loaning out in each quarter, the best interest rates so that you're able to get the lowest payments. And especially if it's your first time being a home buyer, potentially end up not having to bring any money to the table, to the closing table.
That's amazing. So just to recap, first thing you want to do is get in touch with you. That's number one. You want to get in contact with you, get in
Yes.
contact with your company. Number two, you're going to run through a credit analysis, which potentially could be a 15-page report with the client. You want the
Yes.
client to start thinking about and imagining a situation and start taking these actions 6 months prior to them wanting to potentially get that home. You want to start now or as soon as possible. Then you're going to lay out that the next steps or a strategy, right? Of okay, how are we going to make this happen? What moves we need to make? And then after that, you have the relationships with some lenders, and those relationships are also going to put them in a great position to then take that next step.
Mm-hmm. Absolutely. Yes, yes, yes. And one thing I'm super excited about. Okay, so I have to go ahead and plug you, Brendan. So Brendan is, just an amazing mentor. I signed up for his mentorship program, the Millionaire Mindset. I'm just stuttering. Okay, I'm at a loss for words. I've been able to earn in just a week of working with you, Brendan. And I don't know, I've already earned $2,500. Okay. Just from some of the just one of the tips that you've given me. And guys, if you don't have a mentor, and I know, okay, so for everyone that's on my live, you got to go over and follow Brendan. Okay, Brendan Boyd. But yeah, he's just been so amazing to my business, and um inspired me to do things that I've been wanting to do and haven't taken that next step to do yet, or had not before I met him. But I'm so excited to announce that I will be soon rolling out my ebook. We're in the works with putting some finishing touches on that. And my goal for summer of 2022 is to start my podcast, Credit Visible. So excited about that. And I just wanted
So
to
so
announce it and thank
That's
you.
amazing news. That's amazing news. Obviously, I got you. You have my support. That the craziest thing. This is the craziest thing. For those that are watching and for those that's gonna check the playback, we ain't really locked in yet. Like he's in the program, but we ain't really lock in how we want to lock in. So just imagine once we lock in, like I'm just so proud of you, and I know that you take your business very seriously, and that you love your clients, and that you're passionate about what you do. So it's really only a matter of time for you to get to those goals. And I'm grateful to be here with you to help you to do that. You know what I mean? So thank you for jumping on the show. This is the
Yeah.
Imperfect Action Show. We got Jen and Nicole, right? On this show, we teach lessons, strategies, principles that you can take in real time. Literally, you can take this right now, replay it back, listen, get whatever you need to get. Take this information and apply it to your life and to your situation in real time. Make sure you guys follow Miss 30-Day Results. Tap into this upcoming podcast she got, and send her a DM if you have some additional questions. Jenna, I appreciate you for jumping on the show, and
Yeah.
see you guys later.